It's
All views expressed by the hosts and guests in this podcast are solely their opinions and do not reflect the opinions of their respective employers. Guests and hosts may maintain positions in the assets discussed in this podcast. This podcast is for informational purposes only, and nothing in the podcast is intended to be financial, legal, or even life advice. Hey guys, what's up? Welcome back, GM. Welcome back to More in Speculation. We have Chad and Danny here from Opnet. Just to set the stage for our listeners, I do think this is going to be a very exciting episode because the Bitcoin land is some sort of like mystical, even though a lot of you might be spending a lot of time on crypto Twitter. I think it's kind of fair to say that it's relatively like lesser known unless you're like you have a very strong interest in that particular area. So I think this is going to be a very great like both like discovery and like just educational episode. And with that, I will pass it to you, Lembro.
All right, guys. First question. We'll start from chat and then Danny after. Same question. Community, tech, or token price?
It's definitely community. Community is number one over everything. Your token price could go to near zero. If you've got a strong community, there's almost 100% chance that it'll rebound. So, I mean, it's all about the community, I think.
Danny?
Community number one. Oh yeah. We've been through, MOTO's been around for almost 2 years. Starting off as a CTO on two different Bitcoin protocols. The token price has gone up and down. The tech has gone left to right. The community has stayed the same. So, that's number one.
What is BTC-Fi? What defines BTC-Fi? Like everyone call themselves like BTC-Fi, but what do you think was truly BTC-Fi?
I mean, I think there really right now there's not really any good examples of BTC-Fi yet. Like, I mean, I think we're striving to achieve kind of like the first iteration of what BTC-Fi could look like. But right now, BTC-Fi is how do I get Bitcoin off of Bitcoin into my either Ethereum DeFi protocol or my my own blockchain that has its own token, and I'm trying to vampire attack Bitcoin away from the Bitcoin network, which puts me in direct competition with Ethereum or Solana or literally every other blockchain that's not Bitcoin. So right now, I don't think there's a viable example of BTC-Fi. I think that we'll see it slowly emerge over time with protocols like ours and other people who are trying to develop on Bitcoin Layer 1. It all starts on Bitcoin Layer 1. I mean, if we're talking about Bitcoin-Fi or BTC-Fi, we're not talking about the actual Bitcoin network. And what are we even talking about, really?
I think it's kind of funny that DeFi for Bitcoin has like spun off into its own term because it's not DeFi right now. Like, okay, DeFi as a core tenet of it is decentralized finance, right? Which comes from the core of having smart contracts you can deposit assets into that no human controls. Like the code is the law, right? Specifically, when it comes to Bitcoin right now, BTC-Fi, or as we like to call it, we call it slow-fi, it tends to be like centralized or partially custodial solutions
it's
for earning yield.
Yeah,
it is. It's just normal financing with Bitcoin as the asset, basically. Like I don't think there's anything wrong with it. I think things like this are good for the industry. Bitcoin is, a little less than $2 trillion asset right now, and there needs to be, merging with the traditional finance world. But in order for like the DeFi kind of yields and gains that everybody wants to see, like nobody wants to go and buy Bitcoin and then give it to some fund manager and get 5% returns and not custody their own assets. Like, that's just not a part of DeFi or like crypto native people. So I think smart contracts on Bitcoin Layer 1 are going to really change the game and bring the D back to DeFi for Bitcoin,
Bring the D back.
Bitcoin,
This guy is oh my
God. Imagine I'm about to edit this video into TikTok or YouTube Shorts to explain what is Meta Protocol and what is Opnet. Keep it short and clean.
All right. I mean, I can give you a quick clip. Opnet is smart contracts for Bitcoin Layer 1. It's that simple. You can put arbitrary data into Bitcoin, we're putting smart contracts into Bitcoin transactions. Users can interact with those smart contracts through Bitcoin transactions. It's an upgrade to Bitcoin's functionality without changing Bitcoin's code.
Good.
Got it.
Okay. Now explain to me, like I am an Ethereum user, what is bringing Bitcoin, a smart contract to Bitcoin?
Okay, Opnet is gonna bring DeFi summer to Bitcoin. That's the one-liner for you. You want sushi swap, you want Wi-Fi, you want MakerDAO type yields. Opnet is the place to go. Before Opnet, all you have right now are tokens and NFTs on Bitcoin. There's no way to get like yield or farm with it. Opnet unlocks staking, yield farming, dexes, lending, et cetera, et cetera, et cetera. Ponzi schemes on Bitcoin. That's Opnet.
Ponzi.
On the real side, right? On the real side, like you can't write smart contracts on Bitcoin. How does it work? Like it's not like Ethereum where it's programmed to be.
You have to say it this way. Okay, now that it's past 5 minutes, all that we have asked was for the IQ 50 crowd. Now we get to the IQ 150 crowd. So you're actually like asking
for the mid curve guys. Hey, don't lie to me.
So,
how the smart contract works.
Okay, so it's basically anyone can put any data onto Bitcoin, right? Like you can put, there's arbitrary data fields in Bitcoin transactions that you can stuff extra data into. They've been doing it since forever. I mean, Omni Layer was one of the first
since
meta
2011.
protocol.
Yeah,
that was in 2011. That's where Tether was first issued. So they've been doing this for a very long time. What we're doing is saying, okay, we'll take that concept where you've got, okay, like Omni was, you're putting basically data into op return, which is one of the arbitrary data fields that says, I'm sending X amount of Tether to this destination address. And that is what the Bitcoin transaction says. Then the Omni indexer basically is just reading what's happening on Bitcoin and updating the local balance pretty much of the state of the Omni network. And so that is like the first iteration of a meta protocol. Fast forward a little bit later and you get to ordinals, which were like NFTs on Bitcoin. And all that really was doing was saying, I'm going to put bytecode for JPEGs and attach them to certain Bitcoin block transactions. And then I'm going to track them with an indexer that is assigning users ownership of that block data. So it's a little bit silly, with the ordinal indexer. If it's like AR goggles, where it allows you to look at the Bitcoin blockchain and say, oh, well, this piece of that block with that piece of information in it, it's owned by this guy. That piece of that block with this piece of information in it, it's owned by that guy. That's what ordinals are. We looked at all these things and said, okay, none of this is functional for what we really want to see on Bitcoin, which is a full landscape of programmability across the board in a permissionless environment. So we said, okay, you can deploy. There's a couple extra steps that we took. One of them is utilizing TypeScript and utilizing, basically you can create, using Bitcoin's native scripting language, you can create new addresses that have certain types of conditions on them, and you can do so automatically. So you already have like basic smart contracts on Bitcoin. They're just not Turing complete. And so we're utilizing some of that stuff to allow for you to deploy smart contracts. So you're making like an inscription, as some ordinals people might be familiar with an inscription. So you're putting data into a Bitcoin block. You're using a wider set of opcodes to actually get this done, but everything's compressed. You're putting the bytecode for a smart contract into a Bitcoin block when you're deploying a smart contract. Automatically, a new Bitcoin address is generated with certain conditions on it. Those conditions include a no spend condition, where you're not able to actually send UTXOs out of this address. What does that do? That means that no matter who has the private keys to that address, they can't send money out of it. Meaning that, this is effectively a smart contract address on Bitcoin. The first transaction of this new Bitcoin address is the actual data with the smart contract in it. And then users can then send their contract calls through Bitcoin transactions to that Bitcoin address. And then our indexer client just reads what's happened on chain and gives you a localized state of events. So the biggest difference between Omni or ordinals is that we also have a virtual machine built into each client-side indexer. What does that really mean? That means that you can do more complicated stuff pretty much.
Okay, basically think about it like the financial world before the invention of like www, right? So you had stock markets, you had trading, but everything was on paper, right? Or they were using computers and using the internet, but they didn't have like www, a way to organize and do complex things. So you had like file cabinets, right? You had file cabinets with pieces of data that are organized and a directory of how to organize this data. That's what like a basic concept of an indexer is. An indexer is basically like a way to look at data through a certain lens and just know what the fuck is going on. You can assign value and ownership of certain things to certain addresses. What Opnet is Opnet is like www. It's like the invention of a really, really organized way to do complex interactions with these pieces of data. So right now you have Bitcoin. Bitcoin's like the internet. It's like a way to store data or to store ownership of things. Ordinals and OmniLayer and all these different kind of meta protocols that have existed on Bitcoin are like file cabinets, and Opnet is like the new internet that everybody knows. Opnet is what is allowing you to build apps and have all this data kind of interact with each other in a smart and complex way.
Understood.
Got it.
Just to summarize for everyone listeners that might be a little bit confused, essentially you can imagine yourself as you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Opnet, it's like if you were to use Opnet's lens, you only check the every second digit, fourth digit, sixth digit, and somehow it should make sense. Although my understanding is correct so far, I don't know how the token transfer, permission, all those things work. But essentially, Opnet enables that via their own way of seeing things. So it's still on Bitcoin. Everything is on Bitcoin's finality, Bitcoin's data. It's just how you see things are different, if that makes sense.
I wanted to do a quick follow-up on, with my limited understanding also, like what is, I guess because you mentioned, Chad, at the beginning, they call it like slow. Well, Chad and Danny both mentioned like, they call it slow fi, right? I'm kind of curious, like is what's the secret sauce, like without telling us the exact like recipe? Like, is it because you built the VM, or is it because like, there was like a certain way that you're structuring it that now makes it possible, but it wasn't possible and it was still slow, like, just like 8-9 months ago, I was like trying to trade both like runes and like ordinals, and like I thought I lost my money for like 9 hours or something like that. So what did you solve without telling exactly your recipe? I guess, yeah.
Okay, so the biggest difference is the basis of a UTXO and an account-based model. So, something like Ethereum, Ethereum and Solana are both account-based blockchains, right?
Yeah, which means that you have every blockchain is account-based.
Any smart contract blockchain is account-based, because what that allows you to have are smart contract addresses, an account that is not owned by like a human being. Ethereum has EOAs and it has contract addresses, right? So it has user addresses and contracts. Bitcoin and every single other Bitcoin fork only have user addresses. So all Bitcoin like private keys technically can be controlled by a human. Now, like Chad was explaining, you can have certain conditions that, you can generate an address that nothing can be sent out of. That's like a thing you can do on Bitcoin, but that's not very useful for most people, especially when you want to do things like a liquidity pool, right? If you can't send anything out of the liquidity pool, that's pretty useless. And so ordinals and runes and really all of the major meta protocols that have been so far are all UTXO based meta protocols, which means that like if I want to send a BRC20 token or a rune token from my address to Lambros, I have to send a piece of Bitcoin that has my tokens on it from me to you, which means that the Bitcoin address that I'm sending to can't be a smart contract. Like it has to be a user. You're sending a piece of Bitcoin from one place to another. You send it to a smart contract address. Well, now nothing can happen to it. It's inherently custodial, right?
That also means that the underlying token needs to play by the rules of Bitcoin itself. Like this is the only time where you see tokens on a given network have to play by the rules of the gas token of that network. Like ERC20s on Ethereum don't follow the same rules of Ether, the actual asset. Same thing with SPLs on Solana and Solana itself. Sorry, Dan, keep going.
This is why you have wrapped ETH and wrapped Solana, right? Like you can't make an automatic transaction or a bid with regular ETH, you have to use WEC because it's an ERC20 token, which abide by the rules of ERC20 tokens, not by Ethereum. ERC20 tokens and runes have to abide by the same rules as Bitcoin. The difference with Opnet is that we have abstracted the accounts that everybody has, the addresses that you have, and we use those as reference points for the indexer to read and assign value to. And again, it's not a separate layer, like a separate blockchain. Everything is on Bitcoin layer 1 itself, but you're putting the data through a different lens when you use an indexer. Okay, take Etherscan, for example, right? Etherscan is not like reading raw data. When you go to Etherscan, you're not reading raw data from Ethereum. You're reading what Etherscan is indexed from Ethereum so that it's readable in a human format. They display it however they want to display it. You're literally using an indexer. You're using a layer on top of Ethereum for pretty much every single interaction that you do on Ethereum, on Solana, et cetera. And so the concept of indexers on Bitcoin is the same thing, where you're looking at this data on Bitcoin, but you're able to interact with it and read it in a way that makes more sense. In our case, that's an account-based method. So like these Bitcoin addresses that have these no spend conditions, for the Bitcoin that's sent to them, they abide by Bitcoin's rules. But with the data that include what we call OP20 tokens, the Opnet token standard, they can do whatever you want. You can make a smart contract address that is a physical Bitcoin address that when you send Bitcoin to, it can't be sent out. But when you send OP20 tokens to it, they abide by the rules of the smart contract, the liquidity pool or lending pool, et cetera, et cetera.
Okay, understood. So wait, how does the indexer work in the sense where if I can change the indexer, technically I can change the way everyone reads my balances, right? It's like I can Photoshop my balance out.
Yeah, so this is how ordinals and BRC20s and runes all work. They all work on a localized state. So my ordinal indexer can have a totally different state than your ordinal indexer. I can make an ordinal indexer that says I own all of the Ordi tokens and I'm a billionaire. And if I build an app or I make a centralized exchange that uses my indexer, that's the rules. That's the way it goes.
This has actually happened before. This has happened before. There was like some collection got hacked or something, and Magic Eden just edited their database locally on their local Ord client and just changed who owned which profile picture from whatever ordinal collection it was, and it didn't make very big waves because, to be honest, like ordinals have like a 1% mind share of in crypto, so it wasn't that big of a deal. But that is something that you can do with the ordinal client in its current form. But it's different for Opnet, actually.
Yeah. This is because most indexers and meta protocols don't have like a consensus mechanism because they're built on top of Bitcoin, right? So they're using Bitcoin's consensus mechanism. They're using Bitcoin's blockchain. And then they're just offering, a localized state of whatever the data on Bitcoin is. Where Opnet differs is we use something called proof of compute, which proof of compute essentially means that every single Opnet transaction that is created uses a series of hashes and mathematical proofs to directly interact with the things that happened previously. So if you change, basically on Bitcoin, you have a Bitcoin block header, you have transaction headers, and then you have transaction hashes, right? You have all these different types of checks and hashes that mathematically prove that things happened. And if you change a single piece of data in your Bitcoin block on your local Bitcoin chain, then the client is going to crash and nothing's going to check out because the math is not good, right? Opnet does the same thing, where we directly essentially bake in the state of the Bitcoin network along with the state of the Opnet network, to where if you change even a single byte of data on your local Opnet indexer, it will just crash. It will not work. The math and the proofs will not line up. So this is very important for having a VM in your indexer, because you're doing very complex things, right? You're doing a lot of math, and you're having like essentially a computer built into your indexer, and this is something that no other indexers have.
There should be no conflicting states between indexers, because since everyone's running the same client and everyone's pulling from the same immutable data set, which is all on Bitcoin, So like this is the difference between, again, a different blockchain and what we're doing with
Right.
Bitcoin is that, all of the state is objectively there already on Bitcoin. You're just retrieving it basically. And so if you're trying to edit your local database, as Danny said, you actually can't with the Opnet indexers. But even if you could, yours would be directly in conflict with everybody else's because everyone's pulling from the same immutable data set. So the state is objectively there. You just kind of have to retrieve it pretty much by either
Got it.
pulling from someone else's API from someone else who's running an indexer or an Opnet client, or running your own, which you could always verify locally yourself.
Okay. So how does a smart contract work in a sense where do people build Solidity, or like what programmers come here, what language they use? Is it easy to just fork Solidity things yeah?
So we're a WASM-based VM.
WASM-based. Okay.
Yeah, so that's like assembly script, TypeScript, Rust, and there's a slew of different languages that all compile into WASM. It is very easy to take a Solidity piece of code and essentially convert it into assembly script. That's what we did for MOTO swap, which is the main DEX. That's what we did for most of the OP20 tokens as well. We just took ERC20 contracts and then converted them into assembly script. So if you are a Solidity developer or a Rust developer, then it should be fairly simple for you to develop with Opnet.
Okay.
Yeah, and also most important, we have all of the tooling or most of the tooling that has existed on Ethereum, transaction crafting libraries, NPM libraries. Like these are the tools that will make it really, really easy for developers to actually make stuff. So, our main goal was like the most noob developer possible. Can they deploy a smart contract? Can they make an application? We have to appeal to the lowest common denominator, but also, scale up to as complicated activity as you can develop on Ether Solana right now.
It's retard proof.
Yes. Yeah.
Okay.
Yeah.
Got it.
Okay.
Wait, just very, very quick. Like, how is the speed solved? Or I guess if
not.
you can just speak a bit more.
So this is Slow-Fi, right?
Yeah, it's not. It's not. Well, at least for now. For now, it's not solved right now. Basically, we rely on Bitcoin block finality in its current format, right? So V1 of Opnet is we're relying on Bitcoin block finality.
You got to start somewhere, but at least real smart contracts. Yeah.
Exactly. And just for the journey of the user, right? You make a transaction. Yeah. This is just to maybe visualize it better. A block confirms with all the transactions of a Bitcoin block, whether that's me sending Bitcoin to Danny, or whether that's Lambros making a swap on an Opnet-based application. The indexer is going to check all of the transactions in that block. After the block confirms, it happens almost instantly, within milliseconds, but it scans all of the transactions in that block, checks for any Opnet-related transactions, and then executes them accordingly. So that's pretty much how you're getting any sort of smart contract-based activity is after a block confirms, then the indexer is reading everything in the block and computing from there.
The other thing that is partially solving for this, at least from a user, a UX perspective, is you can index the mempool as well. So you can index and process the pending transactions and present them as though they have happened. So let's say you're going to make a swap, right? MOTO swap is the DEX that we've built. It's basically like Uniswap, SushiSwap, V2 style pools. If you have to wait 10 minutes to know what the proper slippage or proper swap rate that you're going to have to make with that swap, basically everybody's going to have to send a swap with 30, 40, 50% slippage because you have no idea what position within the block your swap is going to go through. You're going to be the first one to swap and you're going to get the rate that displays, or you're going to be the last one and the price might be 30% higher by the end of that block. So what you can do on the front end of Opnet applications is you can index the mempool and show what the expected value at the end of this block for your swap will be within the position, right? So this is kind of how we get around swapping on a 10-minute chain. Is you don't have to necessarily send a swap with 50% slippage because it has an estimate of what your expected value should be.
Yeah, as you could potentially imagine, there are some types of trading that are not this is not optimized for, right? Like a high frequency trading, this is not exactly the best place to do it. But this is where you kind of dive into the SlowFi thesis of, for a lot of DeFi, high frequency is not exactly a positive, right? Like, okay, look at, some of the fastest blockchains that are out there. That's not always where DeFi thrives. In fact, DeFi's peak, on Ethereum was, before they actually upgraded and changed Ethereum.
So if you look at the price charts of all of the DeFi summer tokens,
this hurts
no,
too
seriously,
much.
seriously, if you look at the price charts of Olympus DAO or MakerDAO or any of like the big SushiSwap, even any of the big DeFi tokens on Ethereum, their price peak was just about around when EIP 1155 was pushed, which made Ethereum faster and cheaper. Now, that might be kind of insane for people to hear if you've only used Solana, that ETH was at one point slower and more expensive than it is today. But ETH used to be, 30-second to 1-minute blocks, and it used to be like 3 or 4 times more expensive than it is now. I remember the first swap that I ever made on Ethereum was using SushiSwap to farm sushi, and it cost me like 0.2 ETH just to swap my stuff and LP it and stake it. Like, it was insane. And then when ETH became faster and cheaper, like basically all these DeFi is another core tenet of DeFi is staking, right? You want to lock your value up. On something.
I was going to say that. Yeah.
Yeah, none of these fast chains have any staking games. Where are the Olympus forks on Solana? Where are the yield farms in Solana? They're pretty much nowhere to be found, because if everyone can stake their tokens and claim their rewards and unstake in the same 10-second span, because everything is so cheap and fast, that doesn't really incentivize long-term playing of these staking games. So, Opnet will allow for the basic DeFi functionalities like stablecoins, swapping, and lending. But I personally think that like the biggest value add in terms of like if you're not an institutional player and you're looking to get those DeFi summer type returns, I think there's going to be some crazy staking games on Bitcoin, because how often are you really claiming your rewards and unstaking and selling your tokens when you're playing a staking game? Like it's not once every 10 seconds. It's normally once a day, right? So if there's 10 different staking protocols that are on Bitcoin layer 1, and Bitcoin only has 150 blocks with 6,000 transactions every block, it's going to be very expensive and very, you're really going to have to be claiming your rewards and selling only for the most valuable transactions, because there's so many things that want to happen on this very limited blockchain.
Understood. Okay, just to summarize it again, for all the mid-curver, it's not a chain. Speed does not matter. You're looking for the native Bitcoin experience. And because of the nature of being slow, it can actually be more fun because of the game theory dynamic, essentially.
It's a... Yeah, just to quickly add, it's a different optimization, right? For like fast chain, it's all like velocity of capital, right? But that doesn't necessarily mean it's like sticky, because like if you looked at like Solana, like the stable coin, like turnover is much more insane, but the staked SOL ratio compared to like the like all these like other chain, it's a little bit different. So yeah, I mean like I think we get the concept for sure. Yeah.
Okay, what are your thoughts towards other BTC L2? Like those optimistic roll-ups, or like I mean, how many people do you? Obviously, you guys are like the most native, the best, like something that I would enjoy, and I can see why. But there must be another group of people. It's just that'd be like, hey, why? I just need to play with Bitcoin.
So we went to Satoshi Roundtable the beginning of February, and Alicia from Botanics gave a very interesting metric, because they're an L2 on Bitcoin. She gave a very interesting metric, which was that most Bitcoiners will not give up custody of their asset of Bitcoin unless they are making a minimum of 4.5% APY. Like if you offer a custodied staking platform that is 5% APY of whatever shitcoin that you are offering, a lot of Bitcoiners are willing to give up custody for 5% return. Now, I don't think that's very attractive to the average user. I think it's very attractive to like whales and institutional players, which, again, let's be real, that is a lot of the Bitcoin market. But for the average user, I don't think there's much like attraction for going to these L2s. And Because they're kind of just ETH forks for the most part that use some kind of wrapped Bitcoin or custodied Bitcoin for the gas token, which is cool for a certain period of time until the native token kind of goes down. But I don't think for the average user these L2s are very attractive because that need for gain just isn't there. I do respect them for kind of setting forth the path and proving that like people do want to do more with their Bitcoin. But at the end of the day, not a single Bitcoin L2 has surpassed even the market cap of wrapped Bitcoin itself. Yeah. Stacks is number one, which is like what they have $2 billion in TVL, I think, something like that. Maybe probably less now.
Yeah, I mean, okay, like just going back a little bit even further, like I look, you can boil it down even further past the technical differences between all the different L2s to what is the main difference in terms of what you're offering to a user versus like Ethereum, right? Like how is 99% of the existing or upcoming Bitcoin L2s different than Ethereum? Fundamentally, you have to bridge your asset to a brand new chain. And on that chain, it's a completely different token. It's a completely different blockchain. It's a completely different environment. It's barely, if not at all, tied to Bitcoin. So really, what's the difference to most users between all of the Bitcoin layer 2s and Ethereum? Like there are small technical differences, but at the end of the day, a lot of that, especially to Bitcoiners, is nuance because you have to also put yourself in the mind of a Bitcoiner. Bitcoiners look at pretty much any token that's not a stable coin as a shitcoin. So, and any chain that isn't Bitcoin as a shitcoin chain. So how are you going to have access to the trillions of dollars of value that are on Bitcoin by creating a chain that is fundamentally really competing with Ethereum's market share rather than Bitcoin itself? I think that if Bitcoiners were willing to leave Bitcoin, Ethereum would have a higher market cap than Bitcoin because Bitcoiners would have just bridged either through wrapped Bitcoin or any of the bridging solutions, or just sell and go to Ethereum. If functionality and optimization was what Bitcoiners were desiring, Bitcoin wouldn't have its current market dominance. People like decentralization, they like the security of Bitcoin, and they like the philosophy behind Bitcoin. And so, I think really simply the difference between what we made and pretty much any layer 2 is, we're offering all of the functionality of any other chain natively on Bitcoin. Like importantly, the user experience for Opnet requires you to never leave Bitcoin. You're only ever making Bitcoin transactions. You're only ever using a Bitcoin wallet. You're never actually leaving the Bitcoin blockchain or bridging your assets anywhere, which is really important, I think, for any amount of Bitcoiners that are willing to participate in programmability or smart contract based games. They're not going to want to leave Bitcoin. And so, I think that we see, there is an amount of Bitcoin that was willing to move. It's combine the TVL of existing Bitcoin layer 2s plus wrapped Bitcoin. And that's the percentage of the Bitcoin market, which is like 1 to 5% of Bitcoin that's in circulation is willing to even leave Bitcoin at all. So that being said, if you really want to tap into the rest of that capital, you have to do it natively on Bitcoin because those guys aren't leaving the chain.
Got it.
Top 3 Bitcoin L2s: Ethereum, Solana, and Tron. That's like they're all the same thing.
No, that's true. That's true. Yeah. Where's Loy and Kuiper?
Bro, this is like this episode is as Bitcoiner as it gets. I swear I heard like 50 times Bitcoin, the term Bitcoin like 50 times.
But I think it's super interesting. Yeah. Go ahead, man.
I was just wondering, where is OPNet right now? Is it live? Is it so 2 questions. Where is OPNet now? What will be its final form? And who is actually paying, or how does the economy work in OPNet?
Okay, so we launched DevNet in early August of 2024, just to kind of allow for some developers to start making their own apps, to see how an OP20 token works, and then for us personally, it was mainly to showcase like MOTO swap, right? We want to this day, Bitcoiners don't have a way to swap their Bitcoin for a stable coin without leaving the chain, KYCing
Yeah.
or custodying their assets with somebody else. And that's like insane. This is an almost $2 trillion asset that doesn't even have the most basic functionality of swapping for a stablecoin. So we launched the DevNet, about, 8 or 9 months ago. And then since then, we've been building a slew of just infrastructure and products to kind of allow. We don't want. I think it was really cool when Ordinals launched, how everything was trading on Excel spreadsheets and there was no marketplaces and everything was OTC. It was very fun, but the market was very, very different back then compared to how it is now.
This was around the time market.
Yeah, this is when Circle was having their SVB collapse. So the times are much different. So what we've been building since then are we upgraded the functionality of MOTO swap very, very much to like kind of the final form, which is not only just a DEX with UniV V2 style pools, but also native Bitcoin for token swap. We call this native swap. We have yield farming, very, very similar to Sushi Swap. We essentially took the concept of MasterChef and then put that on for MOTO Swap LP tokens, as well as single-sided staking. And then this is a new thing, is self-custodial Bitcoin staking to farm tokens like you do on MasterChef. And this is a forkable program that anybody can use. We built OP-Scan, which is like an Etherscan style explorer for all of the Bitcoin transactions and Opnet transactions as well. We built OP Wallet, which is like our wallet solution. Opnet works with any Bitcoin wallet, but you just as a user, you want to be able to see your assets in your wallet. You want to be able to make in-wallet swaps and do things like this. So we built a wallet product to do that.
Well, there's never been a programmable Bitcoin solution, so there's not been a wallet that caters towards applications and any amount of programmability. So we kind of have an advantage there of building a wallet that can cater to the applications, et cetera. And also, by the way, just to backtrack a little bit too, we put out the first testnet version, our DevNet for Opnet. Like, we're indie builders, so we haven't had over the course of our entire history, we haven't had a formal fundraise. We did some community fundraising and self-funding, but mostly we're indie builders. So we put out the first version of Opnet in terms of the DevNet, just to basically showcase hey, this is possible. This is what we're making. And then we've made, slow and steady improvements along with really thorough audits, basically for the past 8 months.
Got it.
So the new testnet with everything that we've been showcasing, there's a couple other things we've been building as well. It should be launching at the end of April. We're trying to get it out around token 2049.
Let's go.
And this will be an incentivized testnet.
Okay.
So there will be some kind of reward. It's not an Opnet token because there is no Opnet token, right, but there is an incentivization model for it.
Wait, sorry. Did you say there's a testnet?
So we have a DevNet out right now, and the testnet will be releasing. So it's not our own testnet.
Oh, how does a testnet work? Because you're a Meta protocol, right? Is it like a Bitcoin testnet with the Opnet?
Yeah.
Sorry, I'm not being fucking stupid, right?
No.
Sorry.
No. So basically what we're doing is we're putting Opnet onto Bitcoin testnet 3, which is the main Bitcoin testnet.
Okay.
So right now it's on RegTest, which is like a local, it's your own chain that we have 30-second blocks so developers don't have to wait when they're building their own thing. Yep. And then we'll actually put it onto the Bitcoin testnet at the end of April.
Yeah, I know you asked what's the long-term vision for Opnet? What's the final form of Opnet, right? So there's a number of things. We can get real schizo with this. I think that our first step is to go from 0 to 1 on Bitcoin in terms of programmability. Obviously, 10-minute block times, but this scales in a number of different ways, and that's what's really, really exciting about this is that Opnet is future-proof in pretty much every single way because there's so many different ways to scale it. So Opnet works on any UTXO chain. And so we can deploy Opnet across pretty much any UTXO based blockchain. That's one thing. Another thing we can do also that is in the cards is, basically we could roll up transactions as well. That I don't want to get too far into, but we have ways to natively scale the layer 1 Bitcoin activity. And then there's a million other options, right? So like if there are Bitcoin consensus upgrades in terms of, adding new opcodes, all of that stuff plays to our favor in terms of what we can do. And then there's also a bunch of other existing scaling solutions that we can just put Opnet on as well. And so there's a lot of different ways that we can scale this. And we can kind of be, again, like future proof towards, basically staying as nimble as we can and adjusting based off of what the market's demanding. Another really important thing about Opnet as well is that it doesn't have its own token. So all of the fees, everything about Opnet, it's all paid in Bitcoin. And it's not paid to us. So we actually don't make money off of Opnet, the protocol itself. That's why we built a lot of key infrastructure, key applications. We're not only building this programmable protocol for Bitcoin, but we're also builders within our own ecosystem, because it's not, if we put a different token in between ourselves and Bitcoin, it ruins the level of Bitcoin nativity that people are experiencing. And it also limits adoption. I think we see this as sort of like an internet sort of protocol for Bitcoin where, basically all of the value already exists on Bitcoin. So trying to put value into a protocol doesn't make sense. All the value should accrue in the applications that are built using that protocol. This is the fat app thesis.
There's something called a fat app thesis and the fat protocol thesis, which are kind of from like the tech bubble era of investing, which is HTTPS and TCP and email protocol, all of these different core internet infrastructures. They are not ownable pieces of technology. There is no value attached to HTTPS, right? You cannot speculate, or never could, on the adoption of this protocol. It became adopted because it was a good protocol and not because it was the protocol that would make everybody money. So where did the value accrue in investing for the early days of the internet? It accrued to the applications, right? So you had Google, you had Amazon, you had ask.com, you had all these crazy different applications that had crazy amounts of valuation pump into them because that was the only way to speculate on the underlying protocol, right? That's the fat app thesis. With crypto, it's a bit of a different story. There's been many times where a totally dog shit protocol has had a multi-billion-dollar market cap because crypto allows for protocols to be tokenized, right? So there has never, ever been in the history of any blockchain an application that supersedes the value of the chain that it is built on. The protocol is always where the most value flows to. So the ceiling for the value of an application that you build when it comes to building a dApp is the value of the chain that you're building on. So if you're going to build on Bitcoin, and you're going to build apps on Bitcoin, and you require a secondary token to be the intermediary for these applications to work, you've now added a much lower ceiling to the value of these apps because there is a secondary protocol. The value of the Uniswap of Bitcoin should be in relation to the market cap of Bitcoin, $2 trillion, not the market cap of whatever shitcoin you're making for the app to work.
You guys should do the CDP stablecoin, but with Bitcoin.
So anyway, a lot of countries that are very interested in that. This is why we moved to Abu Dhabi.
Question. So how is there going to be an Opnet token?
No, so there is no Opnet token.
So let's say I like you guys. I heard there's an incentivized testnet. What would be given out? I guess Bitcoin.
No, so no. Unless we suddenly had the Satoshi wallet, we had 1 million Bitcoin. I don't think that we could just willy-nilly give away Bitcoin, unfortunately. But what we do have is applications that we've been building, right? So let's say you're a builder, and you have two options, right, for accruing value to the things that you're building. Option one is you build something like an L2 or a utility token that allows for your programmability on Bitcoin to work. Maybe you make $5 to $10 million, and that's good enough for you. Your apps maybe go to $10, $20 million market cap, and then everything fizzles out when the bear market comes, right? The secondary option is that you build something that doesn't have a token, that can't be speculated on. And so the speculation of the adoption or people wanting to invest in the thing you're building in go to the applications just naturally. This is how the tech bubble worked in the early 2000s. So what we plan on doing and what we have been doing is building as many of the apps that we can in house, as well as things like Dex tools and the wallet and the Etherscan, Infura, things like this. So basically, right now in this very moment, if you want to speculate on the value of Opnet, you can buy the MOTO token that is a trading token right now. Trades like a BRC20 token, so it's peer to peer. It's based on the ordinal client right now. But when we launch Opnet, the token will be migrated into the OP20 standard, and then there should be hopefully thousands of different OP20 tokens with many different apps.
Yeah, and inevitably, when we're no, go ahead.
So you guys were building a swap on ordinals before, right? As MOTO swap, and then because the limitation of ordinals, you guys decide to build Opnet, and then to make Opnet good, essentially you build all the toolings and everything on it, and there's a token that's confirmed. Let's say the only speculative angle on it is going to be MOTO, and
yes,
then
that's right.
And then obviously when you use more things, there will be more token, etc., etc.
Exactly.
So basically, we found ordinals in like February of 2023, which was like a month or two after ordinals first came out. And the first thing that we wanted to do was invest in the Uniswap of Bitcoin. And it became very clear that, with ordinals, nobody's going to be able to build that. So we spent about 6 months doing R&D of ourselves. We attempted to build basically a version of BRC20 that just had Uniswap built into it. This is called CBRC20. This was like our first venture into the space. We would have just used BRC20, but the way BRC20 works is you can only have tokens with the 4 tickers, and only one token can have that ticker. So there can't be 2 different tokens that have the same ticker. And somebody else had already deployed a token called MOTO. So we decided to fork the concept of BRC20 and add our own things into it because we couldn't deploy the MOTO token ourselves. So we made our own version.
So you guys didn't CTO the token, you CTO the chain of the indexer.
We literally did.
Got sniped,
yeah.
bro.
Yeah, we got sniped.
That's right.
Yeah.
No,
I mean,
but
for us, it's important to make. Look, I think that if an application is going to have a token, that token should do something, right? That in crypto, we're backwards compared to the rest of, if I talk to my parents or their friends or something like that, and they're trying to wonder like, okay, why does this token have any value? How much money does this crypto company that has a token, how much money do they make? How does that line up with the valuation of that token? And in a lot of instances, it doesn't at all. It doesn't make any sense. And that is, I think, a fundamental flaw of our industry, and I think that this is actually changing. I think this cycle we've seen a lot less highly hyped or highly successful, VC token launches, because people are getting hip to this, where they're saying, okay, well, I'm buying something at a $5 billion valuation at launch. What is really the upside? Is X chain going to actually exceed the value of 10 of the 10 S&P 500 companies? No, it's really likely not. I think that was a little bit of a delusional part of last cycle that hasn't really carried over to this cycle. And I think moving towards the future, especially with more institutional adoption of crypto, they're going to start being way more skeptical of valuations. And I think valuations will start to line up way more with how much money or how much actual adoption does X protocol or X token have. And that is going to be how things are priced in the market. And so kind of in anticipation of that, and going along with our own philosophy of building, when people are making applications on Bitcoin, the only time you should have a token is if the token does something. And if that token, for example, like with MOTO swap, you stake the MOTO token and earn yield from the actual swap. Or again, there could be a possibility. Look at one of the most successful applications of this past cycle is Pump.Fun. They don't even have a token, right? They've just been eating on the fees. And so their valuation makes sense based off of the money that they're bringing in. And this is sort of the environment that we want to incentivize on Bitcoin layer 1, especially because Bitcoiners are pretty adverse to buying other tokens that aren't Bitcoin anyway. So, the environment we want to really see on Bitcoin is if you have a token, you can launch a token permissionlessly, you can launch meme coins, you can launch whatever you want, but whatever token you're launching, it probably should do something. And then the value of that can actually be attributed to whatever amount of profit or adoption your specific application actually has.
I think that's a pretty good way to end this. I think you've just described what's the future of the cycle and valuations and things are going to look like, because we try to keep this pod under like 1 hour. So I'm gonna close with one last question for both of you that we always ask, and it's gonna be my turn to ask it this time, I guess. What do you think is one thing required to make it in crypto? Maybe Chad can go first, and then Danny.
Yeah, I mean, I think you have to have a really strong community. I think, Bitcoin's strength is its community at the end of the day, right? The decentralization, the security of Bitcoin itself was obviously novel, but and it still dominates. But the community of Bitcoiners is really what give Bitcoin its strength, right? I can tomorrow make a fork of Bitcoin that has no following and no liquidity, and even though it's exactly the same as Bitcoin has the community behind it, which is what gives it its strength. So if I had to say, again, community is obviously it's what's driven us to this point. It's what kind of attracts us to the building in the crypto space versus anywhere else. And so, yeah, I mean, I think a really strong community is that is number one. You're not going to get anywhere without something like that. We've seen a million different projects have as much institutional adoption or VC funding as possible and completely flop on launch because it just doesn't appeal to the average user. They fail in terms of building up a really strong, dedicated community. And that really, I think, is what gives projects longevity in the space.
Balls, conviction, and the right dosage of delusion. That's my answer.
I love it. That's gonna be a clip for sure. Balls, delusion, and the right. Okay. Hey guys.
Chad, bro, I think you're one of the few guests that truly believe in the community, because we have asked this for over maybe 60 guests, and so far no one has actually said community in the how to make it in crypto. Respect that.
I mean,
Respect,
shit,
yeah.
I have no technical ability personally. The only thing, my history of trading, the only time I've really ever been successful in trading, and I've had a pretty solid run, is getting into communities, building up, network and friendships and stuff. It's all based on community. So I believe that bullshit, man. I believe that bullshit all the way.
I love it.
Love it.
Yeah, with that said, guys, I think we're gonna stop it here. So check out all the show notes for all the details around Opnet. All the ecosystem they're listed on their website and all of that. And yeah, we definitely need to have you guys come back and we can talk about the future of Bitcoin. What happens when the mining fees, blah blah. Is Opnet good? But that's gonna take 3 fucking hours. So let's end it here for now. But I'm excited to chat about about all of that with you guys. Yeah.
All right, guys. Thank you for Chad and Danny for giving us $500 worth of MOTO tokens for 5 users, for 5 guys. One of them will be the best recap comment on YouTube. Another one will be the funniest comment on YouTube, and we'll do a lucky draw out of 3 on YouTube on the next episode or something. The more details link in below.
But okay, guys, yeah. Again, thank you for making some time. Would definitely love to catch you guys in Dubai because we'll both be there. So, yeah.
Nice.
Sweet.
Okay, cool.